Good afternoon, Scott Bartlett, T3 Live. Welcome to today's recap. So we came in this morning and it looked pretty red, right? Some divergences around the world. S&Ps were down 6-7 handles, or maybe 7 to 9 handles, whatever it was. Gold was higher. And the bears had the chance to press the market. Okay, we've had different type of tradable moves where you actually could make a little bit of money short, but anytime you've tried to press a situation, especially pressing the shorts, it hasn't really worked. So if you didn't come in short today, there was really no money to be made from the short side. You had to actually cover and then, make some adjustments and look for strong stocks, which has been happening where we've had really nice movement. I think we put the lows of the day in the first 10 minutes, and then the spiders reclaimed that 168.55, and then you had to be like, okay, what's next? Take a quick look at the chart of the spiders. You'll see, here is, where this was the low back in June. Here was the quick move sideways, reclaim the 50-day, get yourself long. Here was a big gap up on that Wednesday, and now we've been trending since. Okay, you want to take a close look at this upper range. Okay, few things going on in here, which you definitely could dissect if you're looking to dissect things, but you have to be an active, trader in front of your desk. This area when it broke right here, that gave you a little bit of a signal to maybe take some risk off, make a little bit of money short. From there, you had a 2-day down move. Then remember that gap up last week? The bears defended that, and it basically couldn't reclaim it, so it just didn't go trend as is. And then today we opened below this area, right? This area was the low of last week, 168.72. This low here was 168.55. And what do we do? They bought, they bought it down there on the 21-day, and we closed okay. So at this point, we're still, just in this big upper channel, with different points of reference, and trade it based on your time frame. Okay, macro investors, I don't think you have much to worry about, especially if you're in the right stocks like LinkedIn, right? LinkedIn we've talked about many times. I tried to talk to you and show you guys the weekly cup and handle pattern just so you guys could learn it. Okay, there's the cup and handle pattern. Boom, big gains. I don't care about the P and the valuation. Then tried to talk about the setup that was getting put in place since earnings, and the setup was a big gap up, digestion above it, and then continuation. There you go. You have LinkedIn, historic highs. Congratulations to anyone long this thing from the initial public offering, and congratulations for anyone who learned how to trade this. There's been a lot of nice movement. Another setup we've been talking about is VMW, right? VMW, similar, obviously not as robust as LinkedIn, but nice setup, gap up after earnings, sideways consolidation, went a little bit, and then today it didn't have enough real juice to get above 86, but still continuing, still something to do there. Okay, Tesla was different. It got downgraded, in the Barron's article. But ultimately, you look here. This was, the tactical 15-minute chart I showed way back when. What did it do today? A few different things changed. Okay, one, this is now out of the way. There's no earnings gap anymore. Okay, so that took some power and some speed out of it. But what happened? It held the 8-day moving average. If you guys were following Sperling on the VTF, he was looking at it around there, and it wound up being a decent little trade. 8-day. I was waiting to see, some more time, and at this point, I'm just gonna, figure it out. But I didn't really trade Tesla. I thought that there really wasn't an edge there because it was in the earnings gap. Wasn't sure if it was going to hold that 145.73 or get to the 8-day, or look how far extended it is from the 21-day, which it's seen a few different times. So, all in all, I would say in stride, not as pent up as it was. So you just have to give it a little bit more room. So with that said, still looks pretty good. As far as Apple's concerned, you had the news of the what was it, September 10th, new iPhone, gapped up, and it was buyable. Okay, first of all, you look at this bottom formation that we've been talking about, rounding up. Okay, here was the earnings. Remember that? We talked about the gap and kind of digest above, and it did it for 3 days, and then it continued. So that was your way to get back involved if you weren't through earnings. And then I think I got out of it somewhere in here, and I actually came in flat today. But you know what? It didn't really matter because you had another entry. We talked about the potential strength if we were to clear above this high here, to get back in motion, 460.45, and that's somewhere around where I had my first initiation. Now it closed pretty well, near the highs of the day, near the old pivot highs that you saw right here. So I do think that this will be another action area, and it should get cleared on its way to this 200-day moving average, which is around 490, and that would be, in this gap coming across. So this stock has been a very nice vehicle for us since earnings. you've had a lot of different false starts in here, and still you can't trust it 100%. But I do think since this gap upheld, it looks pretty darn good. And then you go to your 5-minute chart today, you'll be able to see another gap in Apple. Let's see the 5-minute chart happens. Okay, this is that line. So yes, you missed this portion of it, but right around here you could have had your entry. So anyway, we'll see what happens tomorrow. Still long there. As far as Microsoft is going ex-dividend, so we'll see what happens tomorrow. But this too, gave you a nice trade. Remember, we were talking about it here, and I've been long since this area. Now you have a nice little bull flag. See what happens if we could trade into that. Netflix, I know Sperling was looking at it. I was looking at it too, and I just missed it. I don't know what I was doing, but I looked away. But meanwhile, Netflix is looking a little bit better. Remember this day when it held where it had to? Another bearish article from Barron's. What are they, the new Citron? Anyway, you look here, you have some continuation to this where it triggered above the prior high, which was 253.71, and closed pretty strong. So this still looks good. Still looks like it's trending. Every time they try and break it, it doesn't break. You still have, you could almost draw this line here, and it's still just moving up. So at this particular point, stay with it, trade it, depending on your time frame, but ultimately been a great vehicle for 2013. Google, I would say, still trying to hang around, but not really much going on here. If you look at this channel now, it's this was a support side, and this right here, yeah, it traded below 885. It has a little gap. It has the moving averages above it. Now it's starting to weaken a little bit. So you don't hear me talking about it that much because it really is not where the momentum is. I guess I'm taking some of these lines off because, by the way, this is an old E-signal chart. That's why these are old lines. I just put this up quick. Anyway, with that said, until it really breaks above this, okay, I think that most guys are going to probably just kind of leave it alone. You have a little pennant being formed here. It's holding, I guess where you could say where it has to, but ultimately no momentum. We'll see if that changes. As of right now, I think it's just on the B list. Whereas, Apple also, remember we were saying how this moved, to the B list as it was extended. Well, today it went back on the A list, and I think it can continue. Facebook's consolidating. Nothing really that new to report there except for it had a huge move. This was that earnings strategy that we talked about. Earnings high, digestion, continuation, and now it's letting the 8-day catch up. It didn't participate today. I just think there's a little bit of a lack of interest right around here. Maybe that'll change. We'll see. But as of right now, I'm in some, and we'll see how it handles this little pivot area. Maybe it needs to retrace a little bit more, and who knows? But at this point, it still looks good. A lot of people were talking about Open today, Catalyst with Facebook. Now that's a clean move. Unfortunately, I did not go with it, but it looks like I should have, right? It triggered above this area, closed near the highs, in a nice consolidation for 3-4 months. So if you were waiting for this to go, there you go. There you have it. So now we'll see, if it continues, and, so far so good. This does look good. As far as the banks, there's really just not that much going on there. I didn't trade one bank today, believe it or not. I still think that it's kind of working its way lower. Look at this. Goldman's already at the 50-day. That's interesting considering the spiders are at the 21-day and some stocks are holding above the 8. So showing you how the banks have not been the place to be ever since this small, breakout failure right there, where we tried to break out and the other banks were weak, and then you had this potent down day. Since then, it's been pretty lethargic. I guess you could use, today's low as a point of reference. We'll figure that out. And that's really it. I don't want to get too far into it. I don't want to make too much of the action, except for that if you trade individual stocks, you could somewhat see the relative strength or weakness early. A lot of nice movement. This range is still intact. I know there was a lot of doomsday people out there. Faber, the crash is going to be like 87, and then Barron said whatever they said. You go down a few days and everyone gets very bearish. Okay, for me, I said, you know what? If that's going to take place, we got to close below 1684. They're opening below it. If they could stay below it, maybe they have some power. You know what? They didn't have power today. Couldn't they have power a little bit later this week? Maybe, but then we'll start seeing some of these names that have been acting well not act so well, right? So with that said, still a lot of nice activity if you want to be at your desk. Continue to have some quick feed. No reason to be excessively bearish. You could have some risk off and trade a few less things that makes sense. All right, like just say gold. I came in long gold because it had a nice inside day after a potent day last week. You have this trend line right here where we're now above. But again, like today, it just was interesting. If you didn't come in long gold, you could not make money long gold. You had to take it overnight. So that's a little bit frustrating for some traders out there. But anyway, now we'll see if it can hold this gap, go a little sideways for a little while, right? Go a little sideways, show commitment to this gap. Maybe it comes in a little bit and then, you know, tails and goes sideways before it goes again. So, but again, this looks decent and something to stay with. I have less gold that I had on last night, but I'm still with it because, you know, it already triggered, and now I'm just looking for some potential continuation. You do have another pivot right here, okay, coming across. So this would be maybe your next technical buy point right around there if it could clear it. Look at silver. Remember we said 17.5 to 18.5 was a better buy than a sell. Well, that was right around here. Okay, shows you that you could even buy a beaten down commodity name, you know, with the plan, and it never violated that. And now look where it opened up, huge gap. So why would it have huge follow through after 1, 2, 3, 4 days paying some individuals? So, you know, give it some time. We'll see that gap. And today's Monday. It's August. Enjoy yourself. We have the summer here. If you're a trader looking for P&L, there's lots of movement, lots of patterns. If you're a macro investor and you hear all the doomsday guys out there, do not change your course, in my opinion. I think you keep doing what you're doing, especially if you're doing monthly flows into an S&P fund that you're not going to look at for the next 10, 20 years. And if you're a stock picker, you know, there's stocks out there. Stocks that are making 2013 highs, stocks that are making historic highs. There's even rotation into laggard names. I think we talked about last week how it felt like Caterpillar was changing its complexion. And you look here on Caterpillar, okay, and I'll show you why. Okay, here was your, you know, double bottom, so to speak, or your support area. And then this was your pivot that it broke above and cleared it pretty well. And now we'll see how it handles, you know, this little area. But overall, you know, some entries in being down high quality names, and with the China news supposedly getting a little bit better, you put 1 plus 1 together, that means Caterpillar perhaps gets a little bit of mojo back. We shall see. We saw that already happen in something like FCX, you know, where it had a very spirited move above this downtrend, and we'll see if it could go sideways a little bit and give another trade. You know, X, the material trade, also, you know, right into the 200-day. So things to do, entries and exits, rotate through sectors, look for nice price patterns. That's the only way you're going to make money. Here we go, Scott Riley, T3 Live, the recap. See you at the morning call with Brittany.